Welcome to our From the Helm series live at the Resources Rising Stars Conference on the Gold Coast. My name is Grady Wulff, market analyst at Bell Direct, and I'm very, very excited. This is one of the companies I love covering. Boss Energy and Managing Director Duncan Craib. Now, Duncan, thanks for joining me, first of all.
Thanks very much,
I know
Grady.
you're a man in demand at the moment. Talk to me about the last few weeks. Where have you been? What have you been doing?
It's been pretty busy. I mean, we've got a lot of interest from investors, particularly in government, and also fuel buyers in terms of where the uranium price is going and how the sector's performing. So, yeah, very busy period.
You've been everywhere, and we're lucky enough to be joined by you. So thank you for your time today. Now, talking about the mine itself, Honeymoon Mine, obviously. How are you progressing? Are we on time, on budget? What's the latest?
We're on time, we're on budget for
Amazing.
first production, fourth quarter this year. So we've basically been executing a strategy that we planned sort of 5 years ago, and it's steadily progressed campaign style to get to the point that we're at now. So we honestly believe that we're bringing Honeymoon into the best uranium market that's in living memory. So.
And I did see a picture of the scope of the Honeymoon Mine and the setup, and it looks phenomenal. So well done to the team.
Thank you. Thanks very much. They're working hard.
They are. Well, they look like they are. So recently we know that a lot of analysts have been saying uranium, the outlook has been good, bad. It's been a kind of controversial topic over a few years. Tell us why uranium is so important and how it plays into the decarbonisation movement.
I mean, government policies around the world have adopted uranium or nuclear energy as part of the energy mix, so to mitigate climate change. So you see, I mean, nuclear is used in 32 countries around the world, particularly if you look at the growth in China, the UK, France, for example. France is 70% nuclear.
Yeah.
US, 20% nuclear. So it's got a role to play. So right now, the governments around the world are sort of looking to now bring in small modular reactor technology, and they're also extending the lifetime of existing reactors. So they were built normally for 40 years, it's now been extended to 60 years, and now there's talk of it being further extended to about 80 years. So all of that demand wasn't anticipated some 2-3 years ago. So yeah, it's a very, very exciting period.
So the time is now for uranium, is what you're saying?
I think so. I think that, I mean, for us, we want to be there at the start of the cycle. So when I was involved in the previous cycle, it's the companies that restart projects that can sort of layer in contracts into a rising market that perform the best.
Now, the Global Uranium Conference last year predicted the price of uranium to hit $100 per pound in the near to mid-term. How does that fare in the timing for Boss coming online?
I think it's very achievable. I mean, if you look at Cameco's quarterly announcement 2 weeks ago, Tim Gitzel, who we all bow before his greatness. He just said that the strong floors they're seeing at 45 to 50 US per pound, ceilings at 75 to 80 US per pound. So the term market's busy and the term market's moving, and that's what we look at. So spot price is a bit like a barometer, but it's the term market that we really use. So
absolutely. So
it's heading there, and you also reflect back on the industry. New projects to come online, so those development plays or exploration plays, the industry deems 80 US per pound to be the incentive price to bring those projects on. So we need to get to that price to encourage new development. Whereas cash costs sub 20. Yeah. We're already profitable.
Ready to go. Exactly. That's what you want to hear as an investor. Now, what makes Boss Energy different to other uranium producers?
The qualitative factors. I think that first mover advantage, we've really pulled a team together, and there's a lot of talent was taken out of the industry in the past decade. So we've managed to get strong talent. We're in South Australia. It's the premier uranium district in Australia. The only operating mines are in South Australia. We've got full government support, whether Liberal, Labor, doesn't matter. They're right behind uranium mining. So you've got government support, you've got good people, and we're fully permitted. So by fully permitted, we've got an export permit for £3.3 million. We're one of 4 companies to have that export permit, the other being Olympic Dam, Heathgate and Ranger that's going into decommissioning in Northern Territory. So those qualitative aspects. Then you take into account that we're fully funded. We've got $200 million in liquid assets. We only need to spend another $2 million on completing our CapEx build for the restart. So we're very strong balance sheet, no debt. No debt whatsoever.
Costs under control is exactly what investors want to hear as well.
Yeah, costs are under control. I mean, we're self-performing. So unlike most mines, sort of when they do construction, go through an EPCM type model, we're doing self-perform because we save about 25 to 30% margin, We're in control of our own destiny. We do our engineering, our procurement, our contracting.
Wow.
Yeah, so it's busy.
So we love the story.
No, great. Thank you.
And so offtake agreements are next in the pipeline.
They are.
Can you update us on offtake agreements?
To put into perspective, we had 2 international fuel buyers visit the site in April. We're involved, I think, in 3 different RFPs at the moment. That's basically the tendering process.
Wow.
So the demand's there and the interaction with fuel buyers is there. We've just been holding out for these higher prices.
Yeah.
So don't be surprised if you see a contract before we get into production.
Oh, can't wait to see what's in the pipeline. Now, the final question, why should investors jump into Boss Energy?
I think, it's a restart project. So the first part of the mine will be on very high grade, known resource. The well fields are developed. There's no debt in the company. We're very well financed. We've got a very strong group of investors, and we're also very well supported by both state and federal government. And there's big demand for, this geopolitical tensions in the world. They're looking for stable countries that can produce uranium, and here we are. So I think our timing's right. We're going to gradually go into a rising market, enter into market-related contracts, and really try and catch that sort of upside.
Absolutely.
From there, let's see what happens. There could be M&A on the table, but let's get Honeymoon up and running first, and then we can look further afield. But
absolutely.
Yeah, we've got the team. We're delivering, and we're on target to be in production fourth quarter.
Then we can't wait to see how the Boss story unfolds over the coming years to come. So thank you so much for your time today. I know you're a busy man, so
thank you.
Long live Boss Energy.
Thanks very much.